Assalamualaikum. Welcome to video 21 IS 38 Intangible Asset. Another standard on assets, but this is intangible. So you will see some similarities with IS 16 in the standard and very important standard because this standard is also very frequently tested standard. So in IS 38, IS 38 says that an intangible asset is something which you cannot touch, but it's a identifiable non-monetary asset. Now, initial recognition. You initially recognize intangible asset at cost. If all of the following criteria are met, it has to be identifiable, number one. That means you can sell it without disposing the business at the same time. Next, it is something that is controlled by the entity. Something where entity has the power to get benefit from out of it. For example, if you are having a patent, copyright, they will give you some benefit. But these are intangible assets. Next, it has to generate future economic benefit for the entity. For example, either it will help you to reduce your cost or increase revenue. If all of these three are met, you will recognize intangible asset at cost. And also cost has to be measured reliably. If intangible asset does not meet the recognition criteria, then it will be taken as an expense in your statement of profit and loss. Items that do not meet the criteria are internally generated goodwill, brand must-haves, publishing title, customer lists, research, advertising, startup costs, and training. Why? It's very difficult to get a market for this. These assets are very unique. For example, goodwill that you have created, not the goodwill that you are buying when you are buying another asset or buying a company, the goodwill that you are getting. No, something that you have internally generated. It's very difficult to put a value on that. So the cost you cannot reliably measure. Therefore, you do not recognize it as an intangible asset. But yes, you recognize this as an expense. Do not recognize does not mean you completely omit or ignore it. You will recognize it not as an asset but as an expense. Now, subsequent treatment. Intangible assets. See, tangible asset we depreciate over the useful life. Intangible asset we amortize over the useful life. But except goodwill. Goodwill we do not amortize. Okay. So when it comes to intangible asset, very important is you have to see whether your useful life is indefinite or finite. Okay. If it's finite, that means fixed number of years, you have to amortize over that. But if useful life is indefinite, you do not amortize it. Rather, you do annual impairment review, irrespective of whether there are indicators of impairment or not. And indicators of impairment I've covered in my previous video, that is I36. You can go and watch that. So intangible asset can be revalued to fair value if there is a active market for it, because finding an active market for tangible asset is easy, but intangible it is difficult because intangible assets are unique products. So it's very difficult to find an active market. Active market is a market where there are homogeneous products. Homogeneous means products are same. You will not have a unique product. Almost all products are same. There are lots of buyers and sellers. So it's very easy to get a price for that. So in practical terms, most intangible assets are valued using cost model. Now, research and development. Recognition of internally generated intangible asset. You have to split into two phases. Research phase, development phase. Research phase is expensed as statement of profit and loss. No question about that. But costs that are incurred in the development phase, you can capitalize as an intangible asset only if it meets this 6 criteria. If it does not meet any of this criteria, it will be taken as an expense in your statement of profit and loss. Okay. First, project has to be technically feasible. Second, asset has to be completed, then used or sold. Your entity should be able to use or sell the asset. Asset has to generate future economic benefit. Entity has an adequate technical, financial, other resource to complete the project, and expenditure on the project can be reliably measured. If these 6 criteria are met, you recognize it as an intangible asset. If one of these criteria are not met, it will be expensed. Now, you amortize development costs. So if you capitalize your development costs, you have to amortize it. So amortization of development costs will occur over the period that benefits are expected. Example, let's say a company has incurred 100,000 on initial design work for a new product. So it is anticipated that design will be taken forward over the next 2 years to be developed with a view to production in 3 years time. So 500,000 they have spent on testing another product. Now, testing is successful. Development team are confident that product will go ahead and it will become a commercial production in 3 years time. So what happens? Now, the design work, that 100,000 that you have spent, you cannot recognize it as an intangible asset. That will go as an expense because it is a research cost. But at this stage, you do not have enough evidence to say that your design will be technically feasible or asset will be able to sold or generate future economic benefit. What about the cost of 500,000? This is at the development cost. This is the development cost. Okay, so in this case, because the testing is successful, which indicates product is technically feasible, so company is also moving the product into commercial production in the near future. So, which they would be unlikely to do if it was unlikely to generate future economic benefit. That means they are more likely to give economic benefit also. So it's most likely to be capitalized as an intangible asset. This development cost of 500,000 rather than expense because it is meeting the criteria. Thank you for watching, and I shall see you in the next standard. Again, is an asset, a standard on an asset, that is investment property, IAS 40. Now make sure that you do questions on IAS 38.